Hey traders, hopefully you're having a great week so far. Got a few things that we want to discuss before getting right into the charts. First thing we see is US passive stock funds back in demand as investors seek steadier returns. And we see on Reuters there is a little article that says that people are moving back into these indexes like the S&P, NASDAQ, Russell 2000, these types of indexes and funds. So data from fund research firm Refinitiv showed passive equity funds, which are mutual funds that mirror stock indexes, attract $860 million in June after a combined outflow of 24.5 billion in the two previous months. We can see that on the other hand, active funds were where fund managers promised selective stocks investing to beat index performance, witnessed sharp outflows in every month in the first half of this year. And this is the actual chart that they're talking about right here. We see the light green is passive on the left side, and the darker green is going to be active. So we do see overall, there is definitely more outflows than inflows. We can see definitely January there were some outflows, inflows in February, March, and then significant outflows in April and May. But we do see a comeback where buyers are now injecting capital back into the markets, which is a risk on sentiment environment. And we just to kind of consider the active, we see that they're decreasing every single month. Now we're going to quickly talk about that Twitter actually seeing what they actually are going to be doing with this. For anyone who does not know, there was a massive crypto Twitter scam where hackers were able to get into a bunch of different accounts: Joe Biden, Barack Obama, Elon Musk, Jeff Bezos, Bill Gates, Apple, Uber. So conglomerates like large corporations as well as individuals who have some high status. Kanye West, Kim Kardashian, I don't really value them, but in terms of the social status, a lot of people were targeted, and they basically just said, give me 5 Bitcoin, send me whatever Bitcoin, and I'll send you double, which obviously is a major red flag for anything. And we can see, let's just dive into this a little bit more here. Other profile. Yeah, we already talked about that. So basically just discussing that this is obviously a scam. Hopefully no one got scammed. That is a really bad situation to be in. Let's quickly discuss the Lebanon blackouts due to the financial meltdown as well as the depreciation, devaluation, and proliferation of their currency. So we do see that the Lebanese pound has lost 80% of its value since last October. That's pretty unbelievable. They're even seeing electricity shortages that have caused the main hospitals to close with operating rooms and delaying surgeries. So obviously that's really unfortunate and really difficult for the people in Lebanon. But we're actually going to dive into the other CPI numbers because we do see the pound has lost 80% of its value. Well, if you're looking at it in terms of the pound, it is astronomically increasing the consumer price index, the CPI, right? And that is going to be a really good gauge of overall inflation within a certain economy. And this global CPI number on a monthly basis gives us a really good understanding for what countries are possibly seeing an overheating within an economy, so they would be seeing inflation, and what countries are going to be seeing deflation, where their currency is actually strengthening, which central banks don't like either. They like to have that nice, cool 2-3% inflation on a year basis. That's their ideal situation. All right, so now we're going to quickly look at this here on an inflationary basis on a monthly rate. We see a lot of countries are still in the deflationary part of the cycle, right? Where velocity collapses because the exchange of goods and services is reduced substantially. People aren't going to restaurants, bars, clubs, entertainment services, and spending money, right? So then the fact that we are reducing the amount of money being spent and received reduces the velocity of the currency, which is an extremely deflationary characteristic in an environment for the economy. Whereas if you see high velocity within an economy, you will see, or velocity of currency within an economy, you will see higher rates of inflation. So what we're seeing right now is overall not much inflation. We do see some numbers that are popping up a little bit if you're really looking at it. Almost 1% in Slovenia, Portugal, but Turkey is probably the biggest one, and they have a very, very substantial yearly inflation rate of around 12%. So we know that there's going to be some pretty difficult times for Turkey if this continues. Kind of what Lebanon's going through right now, where if they have exports, they have to, or if they have imports, sorry, that they're purchasing, they need to borrow US dollars in order to pay for those imports, and you need to borrow US dollars if the currency you are transacting with and producing revenue with is devaluing at a faster rate than your revenue to pay back for your principal, for your interest, and for your loan. You'll never get out of debt. So it's a very difficult downward spiral that you can really get into if the native currency that you're using is devaluing extremely quickly and you have borrowed funds in another more classified as a safe haven currency like the United States dollar or the Japanese yen. So there's definitely a lot of difficulties in terms of the imports and exports when you have such a inflationary currency. So, quick look at the comments here. Thank you for sharing your know-how from Silvino. Happy to share my thoughts. This is also very helpful for me as well, but I always do appreciate the engagement as well as some of the feedback that we do get. It could be constructive criticism, it could be just a good compliment, it could be really anything, but thank you very much, I really appreciate that. So we're now going to get into a little bit more of the technical side of the video. We talked a little bit about the fundamentals, a little bit of some news because that is pretty important, but we're going to jump right into the technicals here, starting off with US equities. Primarily going to be looking at the S&P to start, and then we'll dive into some of the small caps, looking at the RUT, which is the Russell 2000, and then NDX, which is the NASDAQ 100. So let's go to the daily chart and first discuss what we talked about yesterday. We really wanted to see this candle right here close, this bullish candle that broke the price out of this range right here. I really wanted to see the candle close above the zone, and we did that. So my viewpoint within this current market is now going to be testing the high here, but the momentum is on an uptrend, and with the fact that we broke out of this high base consolidation and made a higher high definitely suggests that the buyers are going to definitely try to push the price above this main zone here. Doesn't mean that we're guaranteed to break it, but if we do break this high, I think as long as we get a higher high and higher low, validating that previous resistance as a new level of support, I think the momentum will still continue. We see this current zone that we're holding below 3230 as a key level of support multiple times back when we were making a strong move to the upside. So we know that this is a zone of sensitivity. We've seen rejections here before. We're looking to see some level of a reaction when the price does get to that zone, which we're seeing right now. We saw a strong push to the upside, candle closure on the daily, and now we're seeing a nice consolidation where the daily on this candle closed right here with a big wick, but now we're seeing the close, so we're seeing a retest of this previous resistance zone right around here, potentially before making a new impulse push to the upside. So if you're looking at it from a larger time frame, this is a key level of resistance, and on the daily this actually held. So this is a major zone right here that we're testing for a new level of support, and we can see that very, very clearly on the 1 hour chart where we want to see the price hold this zone of support. That would be a really ideal situation, and then if we start making and forming these higher highs and higher lows, that would be looking phenomenal for the overall bullish outlook for the SPX in my personal opinion. In terms of shorts, what we would need to see is ideally the minimum that you would, in my opinion, what I would like to see is for the price to be looking to break out of this consolidation, because we were initially in this consolidation right here, this structure, and then we moved up and then formed that previous resistance to new level of support. So that's currently what we're seeing right now, is just literally this consolidation is now just trending a little bit higher, but I think the momentum is still going basically around sideways. So I'd like to see it break the market structure, so it would have to break this support zone and trade back within this range, and then we're going to be really close to this gap right here where we see this resistance. If we're looking on the daily chart, so let's take all that back. If we're looking at the daily chart, we see this gap within the market where we see a series of spaces from zone and zone. So this is a zone indicated by these very significant wicks. And then the next zone, if it does move to the downside, we can see key level of support, key level of resistance, key level of support. It's going to be right around here. So if we are looking at short opportunities, I would say we want to see the price at least trade back in this range. And if we're wanting to be a little bit conservative, we would look to see it trade within this range. So then we have an entry from this trading range into the low that we saw back in June of 2020. So definitely some stuff to go down before we look for any short opportunities. I would really like to see the structure change if we're looking for shorts, but as of right now, with the current structure of the market, it just makes sense for me to continue the momentum because the overall technicals to me indicate that there is a more of a risk on sentiment within the US equity market. So that's the SPX, just consolidating, but it'd be really nice if we saw a break and then a retest and then a continuation to the upside. So let's just quickly discuss using the bars chart to understand what we could be seeing within the market. So ideally, you might want to see something like this, where you see some consolidation, like a break, consolidation, kind of like that, where you get this previous level of resistance right here into a new level of support, and then you see the continuation move to the upside. So that would be the ideal situation for a risk on sentiment move, where you're looking for further dollar weakness. Overall FX currencies that are in risk on would be going down. Oil would be going up. Gold is a little bit iffy because there is monetary uncertainty due to the currency printing, but with the SPX and gold being negatively correlated, I think that if the SPX does aggressively move to the upside, breaking this zone, gold might consolidate here for a little bit, but we don't want to get too far ahead of ourselves in our bias or analysis. So that's going to be the SPX. Let's now go into the Russell 2000, which has actually been a little bit more bullish. We can see when we are looking at the smaller time frames, don't know why that's green. We can see that this previous key level of resistance is now acting as a strong level of support. So we've invalidated the head and shoulders. We've broken above the resistance, and the market structure is now changing to continue the move to the upside. So my personal opinion, this is going to even further validate the thesis that this is going to continue, or the market is going to continue the risk on sentiment. That's my personal view. From what I've gathered so far. The NASDAQ has not done much. Makes sense. The SPX has really been completely sideways so far today, so it makes sense that the candles here are really not really moving much. But we do see this previous level of 1, 2, 3 resistances is now acting as a nice level of support in confluence with the previous horizontal zone of support. So we know that there's a decent amount of buy pressure here, and I think the highest probable situation, we saw a bearish impulse push to the downside. This was a bearish pullback, but then when we tried to make the second attempt for the impulse push to the downside to break our support zone, we actually got a higher low. So then if we see a series of higher high and then a higher low again, well, that could give you an indication that we're now going to start trending back up to the upside, right? It's not going to be absolutely perfect, but the fact that we already saw a higher low, and if we're able to make a nice higher high, breaking this structural zone right here, that would be phenomenal to see for the longs. So we don't see that just yet, but the fact that it's holding, making a higher low, suggests that buyers are inching to enter the market and are willing to pay a higher premium or higher price in order to get some exposure in the NASDAQ, which makes sense for longs because it has been one of, if not the strongest indexes relative to the rest of the indexes that we do look at. All right, little discussion on the VIX. So we did break this ascending zone of support, creating a, you could call it a channel or a wedge or an expanding zone, but I just am viewing this as an ascending triangle pattern. The fact that we broke this ascending support definitely suggests that the volatility is going to further reduce to the downside, meaning that the SPX is going to reduce in volatility, which is overall a risk on sentiment. When volatility is increasing, you don't want to be in, you don't want to be long, or else it's just really messy. Where volatility is slowly going down, like you see here, this is the type of I guess not growth, but contraction and volatility you're looking for. Nice, slow, methodical steps to the downside, breaking resistance or breaking supports, holding resistances, breaking supports, holding resistances. That's the type of structure you're wanting to see within a risk-on environment, looking at the VIX. And in terms of the overall structure, I think that's definitely a possibility where we saw a massive super spike. Let's get our brush. Massive super spike, and then you see this fade, right? That is the type of structure you're looking for, and that's exactly what the VIX does. When we go back to a different time frame, right, we see big spike, fade, long fades, right? You're looking for these nice long fades when you are looking for risk on trades, and we can see right now we got a pretty big pump to the upside. Oops, not looking for that. We got a pretty big pump to the upside, and now we're in our fade phase, which is a good phase to be in if you are looking for opportunities to the long side on risk on instruments, in my personal view. So that's going to be the VIX. Looking pretty good. It'd be nice to see it continue to go to the downside, and that is what I'm expecting, unless not BTC, unless the SPX does something a little bit random, or there's some major fundamental news. Doesn't really seem like there would be any reason, technically speaking, that we would have an absolute capitulation to the downside, is my personal view. So that is going to be the outlook for the US equity markets. We're now going to dive into the global markets, which is going to be looking at the Japanese stock market index, which has not really done much. The Australian stock market index has not really done much either, so not a whole lot to discuss about on that end. We do see the formation of an ascending triangle formation, or you could call it a symmetrical triangle, depending on how you want to view it, but we are squeezing with a series of lower highs and higher lows towards an apex of the structure. So it definitely looks like it is slowly squeezing, although it does look like we have some time. And then the UK's London stock market index has not really done much. It's performed relatively weaker than a lot of these different indexes. And then the DAX is the last one that we're going to look at, which has proven to be a relatively strong index compared to the rest of the indexes that we're looking at. And it has reached its previous high of June 08. Not a lot of indexes have done that. The SPX has, and the NASDAQ has beat it. But the DAX is up there as one of the leading indexes in the equity space, in my personal opinion. So it's looking pretty good. The continuation of the risk on sentiment does look like it is holding, with global equity markets moving to the upside or consolidating, which is definitely a risk on sentiment in my personal view. So that's going to be the global markets. We're now going to go into some currencies. First, we're mainly going to be looking at the US dollar index, which is DXY. So this is going to be mainly comprised of 60% euro and then some of the other major and minor currencies. But overall, it's going to be the strength of the US dollar, right? So what we're seeing right now is, if we're going back all the way to the daily chart, we see this major level of support right around here at around 96. Get held yet again. We do see this nice topping pattern, so it does look like we got an impulse push, pullback, and then our next leg to the downside, which I think could be a possibility. Although right now we are just holding our descending channel formation on a smaller time frame. But we can clearly see just how aggressive and strong the sellers are with this nice topping pattern, in my personal opinion. Then we see a previous support, tune resistance, and then we see that continuation where you're seeing lower lows and lower highs get broken. So we do see a nice support here on a large time frame, but the channel that we're holding to the downside is going to be a lot more significant. And I think as long as the SPX is going to continue its upward momentum, the dollar is going to weaken, because people are selling the dollar and buying other assets, whether it be equities, it'd be gold, it'd be crypto, whatever the case may be. But weakening dollar is, to me, indicating that people are willing, or global investors are willing to have a higher risk tolerance in order to find and invest in a appreciating asset compared to the US dollar, which is not really going to give you anything. It's going to make you lose value over a period of time due to inflation, right? So let's go into the smaller time frames here onto the 2 hour. We see this nice descending, actually I'm going to keep it on the 4 hour. We see this nice descending channel here, and we are holding this previous resistance or previous support as a new level of resistance right here, which is great to see. We were looking for a potential lower high to hit right here because we do see this descending resistance and descending support. We've recently hit the descending support zone right here, made an impulsive push to the downside, so we were thinking we're going to get some corrective push that is going to push the price back into this trading range, which was a previous key level of support. 1, 2, resistance, and then support. So I thought there was going to be some level of resistance here. So it's good to see the dollar come back a little bit and try to validate this zone. We've already done it before, actually twice. But the expected direction, in my personal view, that we're going to continue to move to the downside. So we could see something like that. But the overall view, in my point, in my perspective, is going to be that the price action for the US dollar is going to continue its weakening, because unless there's like a huge sell-off and global investors are worried, fearful, anxious, I just don't see people getting out of the US dollar. And we're not seeing CPI numbers go up where there is a worry of inflation, where there's a substantial amount of people who would convert their currency into a fixed asset like gold, silver, or cryptocurrency. We don't see the CPI numbers or inflation numbers go up yet. There's still a lot of deflationary pressure put on the economy due to the velocity of the currency decreasing, the saving mentality, like Japan especially, as well as the overall demographics is putting additional pressure on the deflationary side instead of the inflationary side, where if you have a younger demographic, it's going to be more inflationary. If you have an old demographic, it's going to be deflationary. Little question from Corona Very 2020. What do you mean? Hopefully you can give me a little bit more context. I have no idea what you mean by you asking what do you mean. So if you give me some context, I would definitely be able to help you out. So that's going to be the US dollar currency index. We're now going to get into the currency. So this is a recent little tool that I added on. I do use this within my FX trading quite frequently. Well, I use it to find my pairs. Like, I don't even open up a chart until I look at this, because what this allows me to do is understand relative strength and weakness almost instantly. So what I can see right now is it depends on what time frame you want to be trading in. It's completely up to you. But as mainly a swing trader, I'll stick on the 4-hour chart, kind of going back maybe half a month or even maybe a full month if you're looking at large trends, and maybe even like a week, just to kind of get a good understanding of what is relatively strong and weak. And what we see right now, this is a really good analysis for risk on, risk off. What is doing well? Well, initially we see Euro doing well, which is a little bit surprising. We'll talk about that in a bit. We see Australia dollar do well and Canadian dollar do well, right? So what's surprising is the Euro is normally a risk-off currency. When there's fear, worry, uncertainty within the Euro, people sell things like equities, indexes that are risk on, and they might buy bonds, or they might just sell, and they might just hold currency, right? And that's still buying their currency, because you're selling equity, buying currency. So the fact that we're seeing risk on currencies get more of a bid, like the Australian dollar and the Canadian dollar, is solid. But it's odd to see the Euro act like a risk on currency, in my personal belief. So I'm a little bit worried. Like, if you're trading Euro USD, it's a little bit different because you're trading two risk-off currencies. It's not a problem. But if you are playing the game of global risk sentiment, I kind of don't understand why I would want to be using Euro as a long, when things that are more classified as risk-on currencies like AUD, like Canadian, like New Zealand, like GBP, they are also appreciating as well. So overall, FX is indicating to me that we're still in a risk-on situation.
We already talked about the DXY. Not a lot of discussion on bonds. They are slowly moving down, but there's nothing really to go off of because we haven't really done much in terms of the yields for these things. All right, so let's now go into the metals. Just quickly looking at the questions, not really seeing much come in. All right, let's now go into the metals. So, in my opinion, looking like it's flattening out a little bit. I did take some profits here on silver, kind of very close to the high, and I'll just let the rest run. I was really wanting to see gold break out, but fortunately it didn't. So we might see a little bit of basing here on the gold and silver ratio when there's a little bit of consolidation. And this is the structure that I was wanting to see break. So let's actually get a picture because this is obviously pretty important to us. So first off, we see the structure right here, right? This is our structure that we are trying to trade off of. And then on a larger time frame, we do see an ascending wedge that's melted up. This is that ascending wedge right here. And then this triangle is like this. So the price action was trading within a large ascending wedge, broke the resistance, and now it's trading within a squeeze using the previous resistance as a new ascending level of support, holding a descending resistance zone. So there's quite a bit of pressure on the demand side at around the 1790 mark, somewhere around here. We do have to take that into consideration. But what we were really looking for was to see this hold. Ideally, we would even see the ascending support hold, this green zone, as well as this breaking to the upside. And once we saw the price action trading within this range, we were really eyeing up gold for a potential opportunity to long. We did not actually long gold, but we were very close to, and the only thing we needed to have was a break and retest, right? That's why I personally don't love just instantly setting market orders right when you see a green bar go above the zone. That's pretty... that's a characteristic kind of for like novice traders. I would definitely say either you're putting a stop entry at a point where you know you're going to get filled and it's actually going to be breaking out, or you're going to be looking for that break, which is going to be creating a higher high from above this high, this high, this high, and this high. And you want to form that strong higher high, and you're looking for that higher low to hold. Right? Once that higher low holds, then you're looking for that next impulsive push. So you're probably thinking, okay, so what would that even look like? Well, this is probably what it'll look like right here, right? So looking for something like this. You get a strong push, maybe something like that. So that was ideally what I was looking for. I was wanting to see the price break up above and close above this zone. Once I see that, and once I see validation that we're holding this previous resistance as a new level of support, you can put a stop entry above here, you can put a stop entry above a wick, you can put a limit if it comes back down to that zone again, whatever you're looking for. But that was what I was looking for in gold. And the fact that we didn't get it, the fact that we didn't break above this structural zone right here, definitely suggests that the buyers are just not ready yet to enter gold, in my personal opinion. So it still looks like a decent overall structure. We can move the resistance a little bit higher. So now we're just in a sideways consolidation where we've broken down below this previous support zone, which was also a previous resistance. So I'm going to close this off. I'm going to close this off as well. So I'm really only viewing gold at a potential long opportunity. I'm not viewing it as a short yet because it just doesn't make sense to me. There's no reason why it would be, and if there is a huge liquidation event where, like we had back in early March, stocks, gold, silver, oil, crypto, everything sold off except for currencies, mainly the dollar and the yen. If that thing happens again, I wouldn't be shorting gold. I would just be looking to gain exposure that is long dollar, right, or US dollar. That is the exposure that I would take. All right, so that's going to be my analysis on gold. I'm going to be holding off for a little bit. Like I said, silver, I will keep a decent amount of my position in, but I did take some kind of near the consolidation when gold started to kind of break to the downside. But I got my stop loss below the zone, so if it does break to the downside, I'm still capturing profits. That's not a problem. Getting close to the target, so I will still let it run for the rest of my position in there to the target, but I got that nice little stop loss below that entry, so if it does go down, I'm still making a really hefty profit, which you can't complain about ever. So I'll just leave this here. I don't really see anything to add on to, especially because gold is not really breaking to the upside that I was looking for. Silver is going to probably take a backseat for a little bit because we just had a really strong impulsive push to the upside. The market probably needs to take some level of a breath, which is going to allow the price action to hopefully contracting volatility, reduce the movement of price action, and then hopefully we get that expansion in volatility like we saw right here, and we get a really solid entry like last time. Basically, rinse and repeat over and over and over is our goal. So that's going to be the metals. Not as much of a discussion as some of the other videos that we have, but sometimes markets are a little bit slower. Sometimes they're a lot more aggressive. So this is going to be the daily for US oil, crude oil, which has not really done anything. We are forming higher lows, but you do have to consider that the US dollar is going down. So WTI crude oil could be getting 0 bids, and it could be completely sideways. But if the value of the US dollar is moving to the downside, it will take more units of the dollar to buy 1 barrel of oil, which would then make it look like oil is appreciating, which it is compared to the US dollar. But in terms of actually getting bids and seeing that bullishness, I do not see that within crude oil. So that's going to be my analysis on oil. I'm not really trading it. I'm not really looking at it. It's for me just an indicator to assess either the risk on or risk off sentiment. And right now we're just consolidating, which kind of makes sense with the overall SPX because yes, we are in an uptrend. Yes, the momentum is to the upside, but we're really at a key level of resistance. So we do have to keep that in mind. The resistance is around 30 to 40. That's that main zone that we want to pass on the SPX. All right, little bit of a question here from Leon says, can we hear more about currency trading or currencies trading? Not sure what you want to hear more about. I can just talk about them for a little bit. That's not a problem. So let's open up a new chart. This was a chart that I was just playing around with here. So let's just first discuss, I guess what you could say is a strategy for my trading in terms of how to pair things together. So I don't just randomly open up a chart and say, hey, this looks like a good thing to pair. The first thing I do is pair, right? What is the pairing I want? And how do you do that? Relative strength and weakness, right? You have to know what's doing well and what's doing not so well, what's doing weak, right? So I try to pair one of the top 2 strongest currencies with one of the weakest, the 2 weakest currencies. So just as an example right now, we see that the basically strongest currency is the CAD, or you could go with AUD, and one of the weakest is CHF or USD, which totally makes sense, right? So that's the first thing we look for. And the second thing we look for is we look for, let's just do on versus off. On versus off. Right? So what does that mean? Well, you have baskets of currency, right? You have on and off. So you have on. So risk on, which is things like CAD, AUD, New Zealand, stuff like that, right? GBP would be in there as well. You could look at South African Rand if you really wanted to get more volatile. And you have off, right? Risk off currencies, which are going to be the USD, which are going to be the JPYs, the CHFs, and mainly the euros. So you got 2 different types of baskets, and I try to compare on to off. Like I wouldn't love trading Euro USD, USD JPY, CHF paired with Euro or USD or GPY because they're both off. They're both risk off. And if you can't find any trades, yeah, that's an option. It's still technically speaking probably a good trade if you're structurally setting up your trades exactly the same. But in terms of pairing, this is the next step that I like to take, is not just relative strength and weakness, but making sure that I'm comparing risk on with risk off. Number 3, I'll look for economic data. right? Making sure nothing's coming out that's going to get me out of the trade, that is going to create volatility that I don't know of. So I always want to be making sure I know the economic data that's coming out, making sure I know the purchasing managers or PMI, looking at the CPIs, looking at the GDPs that are coming out, looking at the employment numbers that are coming out, looking at a bunch of stuff, right? Like basically looking at the economic data. If there's economic data that's coming out that is going to be impacting the price, you can look at Forex Factory, investing.com, whatever the website is. But that is a really important thing to note. And then once you have what you're looking for, relative strength and weakness, if you have a couple currencies that are strong, a couple currencies that are weak, and then you see, okay, the pairing's looking good. Okay, there's no economic data that's coming out that's going to potentially kick me out of the trade. Well, then you're looking for structure, right? Structure. And this could be your trade, like whatever you trade, your method, your strategy, you could be using whatever it is, right? We have a certain method that we use, and this is probably going to be the most different for everyone, but I would say 1 to 3 should be pretty much similar for everyone. Whereas the structure, the trade, how you approach the markets, what are you using? Are you using divergences and RSI, or are you using triangles, wedges, channels, high bases, or bases together, high base, low bases? Are you using head and shoulders? Are you using reversal patterns? Are you using Elliott wave? Are you using Fibonacci's? Are you using Ichimoku cloud? Are you using confluence of different indicators in TA? Whatever it is, I have no idea, but that would be the structure. And before you look for structure, you need to go through these sections first, in my personal view. If you just look at structure, you're not going to know what economic data that's coming out. You're not going to know if there's going to be large amounts of volatility, so you're probably going to get kicked out. And understanding global risk sentiment and risk off, in my opinion, has helped me greatly in trying to understand what currencies I should be in and should not be in. So that's a little bit of information on the FX side of things. Hopefully you got something from that, Leon. And we're going to move on here. So let's go on to, I think, we're done at this point in terms of the global macro. We've covered basically all the metals, oil, and the gold and silver ratio. So now what we're going to be doing is looking at some crypto, which is always a really fun time. So let's close this off. So if you're just looking at FX, see what I did here. Euro USD I don't absolutely love because it's a risk off versus off, but Aussie dollar, good. GJ, really good because there's a risk on off. And then this is just to assess which one is going to be weaker, because right now I'm viewing the market as a risk on environment. So I want to be looking to short things like CHF, Euro, not right now because Euro is doing relatively strong. You want to make sure that you're looking at relative strength weakness, but in this current environment, you want to look for shorts that are risk off. So you're mainly looking at CHF, US dollar, or Japanese yen. So you could pair, let's say for example, right now we see Japanese yen is weaker than the US dollar, CHF JPY. You can also see Swiss franc is appreciating compared to the Japanese yen. So if you're looking to short anything, Japanese yen would be the currency to short, right? That is how I go about comparing two things together, and making sure that I'm on the right side of the trend. And then looking for longs, let's just see what's doing well here. Euro's actually doing well, which is actually pretty crazy. So let's do Euro odd to see what's better. Euro's actually doing better than Australian dollar. Wow. If we're going back to the 4-hour, Australian dollar is way, way stronger than Euro. But in terms of the recent price action, kind of looking at the smaller time frames, Euro is picking up a little bit. Definitely. But I wouldn't want to be looking to long Euro ideally. It's just interesting to know. We also saw Canadian dollar up there, so you could do Euro CAD to see what is stronger. So on Euro CAD, we see Euro is really doing a lot better, but we are seeing a slight pullback here within the strength of the Canadian dollar right here. Previous resistance support zone. I just like to draw that in. And then we see another zone right here. So we see a little bit of a basing. That's good to see. We're still above the 50, so we're not really changing the trend yet. Massive move to the upside. Wow, that's a lot of volatility. But anyways, I don't want to go too far into the FX because we do have to still go over crypto. But in short, that is how I go about understanding pairing and making sure I'm trying to find the highest probable trades using historic price action and momentum. In short, basically, right? No sense just opening up a chart randomly, not looking at data, not looking if that currency is strong or weak. Yeah, that is like technicals do speak to buyers and sellers. Price action definitely does speak to the buyers and sellers within a market. But if you are in a certain asset class, like we're doing the same thing with crypto, if you have the option to trade any altcoin, why would you just randomly open up a chart and just hopefully find the one that's stronger than the rest? That just doesn't make sense, right? If you are looking for longs, you want the asset that has been doing the best out of all the different assets that you can pick. That makes sense to me. Like I am a trend trader. I'm not a reversal trader. I don't really trade head and shoulders too much. I'm a trend trader. I love triangles, wedges, and bases, like these bases, right? That is what I love. So that's what I'm going to be looking for. So I look for negatively correlated assets and pair them together. Hopefully you got a little bit of information on that. Leon says, "You're a legend. Thank you." You're very welcome. Appreciate the thank you, I guess. Just looking at these here. But yeah, no problem. Hopefully that gives you a little bit of information that you can use in your own trading, because at the end of the day, this channel, this live, is to help people in the financial markets, really. All right, not really going to look at Chainlink right away, although it does look pretty damn bullish if you ask me. Let's now look at BTC. It did move to the downside a little bit, but something to note, you're not really seeing a decrease in volatility yet. We've been talking about if you're in cryptocurrencies, if you're trading crypto, Bitcoin is not the place to be right now. It's completely sideways. Unless you are a very quick short-term scalper, you're not going to be able to make any real money within this small consolidation. We saw the same thing happen within, we can see 25th of March, let's say March of 2019, as well as October of 2018. Both times that the volatility index for Bitcoin went very low, we aggressively saw a massive move soon after, right? It makes sense. When you see contraction and volatility get tighter and tighter and tighter and tighter, there's a point where you're going to expand in volatility. And when a certain asset gets pushed in one direction to one extreme, it's going to get pushed in the opposite direction. Same kind of thing with everything in life, really. Maybe not everything, but I feel like there's a lot of things that are like that, where you push something one way and it's going to come back at another extreme, where I think it's going to be the same thing, right? And then the big question that we're talking about within our Discord is it going to be either going to an upside breakout or a downside breakdown? In my view, just looking at the overall large macro structure, I do think that the move is potentially going to go to the downside. I know it's unfortunate to hear for people who are just in the crypto realm, but I think it'll be healthy. I think it'll be needed, and it will allow you to reinvest or invest when you initially didn't in things that are relatively strong that you missed out on the first time round. So what we're seeing right now, like I said, is decreasing volatility. We see that within the daily as well as the 1 hour. So we're not really going to be talking about the BTC charts. What we will be talking about is the total 2, which is the cryptocurrency market excluding Bitcoin, which is holding its support just barely. We see that previous resistance turning into new support. If it starts breaking down and going below the support back within this trading range, that's not great for alts. That means that the value of the total altcoin market is going down, meaning things on average are depreciating more than they are appreciating. So it's not great to see, but we do see that the price is still holding, so there's still some optimism, hope in the bulls, in my personal opinion. And we'll look at some altcoins within this video as well to gauge how they are performing. All right, so that's going to be the total two. Not really seeing a whole lot of movement within the Bitcoin dominance chart. If we go to the 2-day, we are seeing a nice hold of this previous low. If we do see the BTC dominance move back to the upside, it means that there's probably going to be a bearish move for the overall cryptocurrency market. Alts will fall at a faster rate than Bitcoin, and that's why Bitcoin will be taking more of the dominance. I don't think that if the altcoin market's going to go up, Bitcoin dominance is going to go up too. That to me does not make sense, because in a speculative environment like crypto, when things are doing well, investors are going to seek higher ROI but riskier trades, aka going into smaller cap coins, which is going to then take away the market cap of Bitcoin and put it into the smaller alts. So it makes sense that BTC dominance going down is going to signal a bull run, whereas if Bitcoin dominance is going up, it means that people are getting away from alts, funneling and flowing their capital from these shitcoins into BTC, because Bitcoin is going to hold their wealth at a better rate than almost every single alt. There's only a few alts that I can think of that has done better than BTC over, let's say, a 2-year period. There's almost no alts that do that other than a few select ones. So let's now go on to the cryptos here for the alts. Normally we don't do stuff for the alts. Actually, we're going to talk about this before we get into the alts. So this is Grayscale Bitcoin Trust. This is the public company. You can invest in this if you want. It's publicly traded on the over-the-counter exchange. And we can see this is obviously very similar to the Bitcoin chart. If you really want to get into the Bitcoin chart, looking at the weekly right here, we can see it's a pretty similar chart to the Grayscale one. If we go like here, and if you go right here, it's pretty similar. Something to note though, we see how Bitcoin is just consolidating within its range right around here since around April. It's just been in a sideways consolidation, not really breaking 98 and holding. We can see that everyone's been talking about it. But what I found interesting is the fact that Grayscale was holding that same area for a while, since until April. But in June 24th, let's say end of June, we actually saw the price go below its key level of support and then validate for a new level of resistance. Now, this isn't the actual price of Bitcoin, but a lot of institutional investors use this as a method of gaining exposure in the cryptocurrency market without needing to go out and make an exchange, buy BTC, buy a ledger or hardware wallet, send the Bitcoin to the wallet, make sure it's safe, and keep your seed and words. And there's a lot that goes into it if you're a complete novice and you have no idea what cryptocurrencies are. So what institutional investors can do is invest in public companies, or even private really, but mainly public companies that their main business is either to mine BTC or to stake another altcoin. Dash is another one. Neptune Dash, they mainly only stake Dash. So their revenues is basically pegged to the appreciation or depreciation of Dash, because they get a percentage of the amount of Dash that they hold for their staking rewards. So getting back onto the subject, I would think that because Grayscale is not getting as strong as a bid as BTC, this is potentially indicating that institutional investors are not as attracted to the price of BTC right around here. They're not, antsy, waiting to get in, holding it right at the support, injecting capital right when it goes at a key level of demand. We're not seeing that. We're not seeing strong buyers continuing to hold the price up on the Grayscale market cap and shares. So in my opinion, that kind of means that there is less attraction from the institutions, which will even further validate the potential of a BTC sell-off before its inevitable historic bull run that it will create, in my personal opinion, which will be bigger than 2017. But in terms of the short-term price action, this is giving me a little bit of indication that is further validating the thesis that BTC is going to break to the downside instead of to the upside. But obviously, this is just one chart. You're not going to just base your entire opinion on just that one thing. But I thought it was pretty interesting to see, definitely. All right. A little bit of link, and then that will be the end of the day. And then we'll get right into a crypto market update for people for our Performante Premium. So obviously, Link's been on an absolute roar, just unbelievable. So good job for everyone who has been able to capture this. After it broke $5 or $4.50, it's just been basically on a rocket ship straight up. So we can do some TA right here, nice continuation pattern, continuation to the upside. And we see this previous resistance, if we get our brush, previous resistance turn into a new level of support. So the momentum is still continuing to the upside, definitely. What we're trying to identify now is, are we going to continue? And if we are, what structures can we be looking for? First thing we want to look at, obviously market structure is looking fantastic. Also another thing, we do see that there was increasing buy volume, which is coming in. Buy volume. But from here, from this high, which is kind of in line with those candle closures, which isn't ideal. But what you're seeing now is decreasing buy volume, which isn't fantastic. It'd be nice to see if we get a little push and a pullback, some more buy pressure coming in, which is going to increase the buy volume, which is going to potentially just pump it up even more, but that's just in terms of the price action. And when we do look at the smaller time frames and take this off, we did see some wicks right here, and then we did see a wick right here. So we do see sell pressure coming into the market, but overall we don't see an immense amount of sell pressure yet, because structurally speaking, we're still making higher highs and higher lows. So the initial momentum to get into the new zone gets sold off, but then we hold and then we rally back up. And then this key level of resistance turn support is going to be our structural level of support right now. So what do I see? I actually currently see a descending wedge. You see our anchor point, and then you see this key level of resistance, which is going to turn into our support, which is in confluence with our $7.90 range for our horizontal level of sensitivity as well. Also, we do see when we go into the 1 hour chart, a nice, well-respected descending trend line. Not absolutely perfect. We got our anchor point. We got our first touch right here. We do see validations of a new support hold from the previous resistance zone, but it would have been really nice to see a little bit more of a contraction in the price action. But you can't always get what you want. That is something that we're going to have to live with. So, in my opinion, it's a little bit of a breakout, but it'd be nice to see the price. Oops, I don't want that. It'd be nice to see the price break above this key zone right around here and then retest before we get a potential move to a continuation pattern. So it's not looking too bad. We can also draw in a ascending zone from the candle closures here to provide a potential level where there's going to be some additional sell pressure, because it does look like we're forming a bit of a wedge here. If we are getting a little bit closer like so, don't really see anything else that we could use there. So don't really see a nice ascending support zone, but this is a resistance that I think is going to be a potential level for sell pressure. So that's going to be the next area that we could be looking at. And I don't really see anything for the support zone unless we're really zooming out, but even then I don't really see anything that's worth drawing on, unfortunately. So yeah, just the resistance there, and I'm pretty happy with that. Alright, so now that we have that, let's zoom in and go into our arrow. Let's see the size of the wedge from the breakout point. Not a great risk reward if you're looking at just simple take profits for the first zone, because you're looking at the possible level being right around here as your first level of sensitivity. Unless you're really wanting to get angled here, kind of like that. So that's our support. Okay, I'm happy with that zone. Okay, cool. So now we can draw in our projections. That just gave us a little bit more space to work with within the price action. So going like this. We also like to do it on the bottom as well. And then make that green, and then we got a nice structural zone. Okay, awesome. That was not green. Oh, that's red. There we go. Cool. So now we got a little bit more of a well-respected structure here, where initially we had this descending wedge, which broke out a little early, but that's okay. Now we're just holding this zone and this ascending zone. So now I'd like to see the price break and retest, and then we got a little bit of a move that we could catch within this structure from around here to all the way up here. And if it does have a blow off top, that would be phenomenal, but obviously we can't guarantee that or expect that. So in the short term, I think that's just going to be the play for now. Let's go on to the 15 minute to see what we're able to find here. Yeah, it's holding pretty well. Got a nice new resistance there. It'd be nice to see the price come back to around this zone, because we see a key level of confluence within the structure right around there. So if we do see, let's just see if we can find something. If we're able to see something like this, that would be awesome. So if we're going to go like, let's do this zone right around here. Like that. That would be awesome. I would love that. So what you'd be looking for is, you could either look for an opportunity to enter here. This would be a little bit more of a risky trade because you don't have the confirmation of a break in resistance, but you do have a confirmation of multiple support zones horizontally, ascending and descending. So you got 3 confirmations of this support. If you want to be a little bit more conservative, you could be looking at this retest right around here, and then your stop loss would be down here, stop loss right here. Looking maybe at a 2.5 risk reward, where if you're all the way down here, maybe that's like 2.3. This could be a +3, which is also a really good opportunity. So that's going to be my view of Link. We'll see how it goes. It'd be nice if it came down here a little bit further, so then it validated the support a couple more times. That would be really good to see. And if it even made a nice channel, like, or a wedge from here, that would be really solid as well. So we got a couple options here. It's definitely a little too early to tell about the overall structure of Chainlink, but I do think that the momentum is looking like it'll continue, and I will be looking for opportunities to continue the trend for Link. Quick look at Bitcoin here. It does look like it is popping a little bit, which is nice to see from the support zone right around here, and we see that previous resistance made a new level of support. So structurally speaking, it's looking pretty good, which makes me still interested in the altcoins, because we do need to have BTC either go sideways or be going up in order for these alts to be really looking optimal for me. So that's going to be my analysis. Don't really have anything to do right now, but I think that there will be some significant moves in the next couple, I'd say, days, if not like sometime next week for sure. All right, so let's now go into the questions here. Gior said, check out Meridian. Let's look at this. Meridian Network. Meridian Credit Network. Meridian Network. Never heard of Meridian Network. Launched less than 24 hours ago. I'm just reading about this literally right now. 200K in volume already. Okay, fellows, so this is my first post here. I recently bought MRDN tokens, and I felt like sharing this as promote this. Interesting. Yeah, it's going to be super volatile. We could check it out if we really want to. I'd like to keep that, so let's just go here. I don't really need this at this point. Let's go. Let's do this one. Okay, so is it MRDN? MRDN. If it's not on Binance, I don't think I can look at it. I don't think it's here, unfortunately. Sorry about that. So we'll go on to the next thing. What about XRP, says Tyler. Good question. So a lot of people are interested in XRP or either have already invested in XRP. And I'm going to come from a technical standpoint because that's where I feel the most comfortable and I feel like I can trust data more than a story that someone's telling me. Everyone's different. You might be a person who only invests through a story. You don't give a shit about charts. You don't care about volume. You just care about the story, how good they sound, and what they're telling the public, the press, and individuals like yourself. That's one way of investing. I think that's pretty inefficient and ineffective, but everyone has their own way of going about managing their portfolio. So I am going to come from it from a technical standpoint. So when we are looking at it, like I said, from a technical standpoint, I don't want to sound like the bearer of bad news, but XRP is not really phenomenal. How do we know this? All right, so let's compare BTC to XRP, right? XRP BTC. Now, Bitcoin is going to be the base level. It's kind of like the S&P. If an altcoin is not doing better than Bitcoin, why would I want to be holding it, right? Bitcoin has a longer history. It has more liquidity and has a higher hash rate. Yes, the transaction costs are going to be a lot more, but in terms of just holding it for an investment, if it's going to be doing worse than Bitcoin, I would just rather hold Bitcoin. But the theory is XRP will be doing better than Bitcoin in the future. So let's look at what happened in the past. Let's look at on the weekly chart. Really, really poor performance on XRP so far, just comparing it with Bitcoin, right? And it's not just XRP, right? If you look at some other things like Dash, right? Dash is not doing great compared to Bitcoin. Let's look at it on the weekly chart here. Right? Really, really weak performance, right? We see those highs way up there and we're not even close. But when you're comparing Bitcoin to something that is appreciating at a greater rate, let's say, for example, Link, right? It's going to give you a lot different of a story. Look at that. You want to be in Chainlink way more than almost every other freaking alt. I've been saying this from the top of the mountain for a while, months and months, and the relative strength is there. It's present. It's very prevalent. So I would say, let's just look at XRP here. XRP, and then let's compare it with Ethereum. Let's compare it with like some large names. TRX. A lot of people like Tron. A lot of people like, I guess, IOTA. A lot of people really like Litecoin, which is not really doing great. We could do, if anyone's watching and you'd like me to actually look at a coin as well, don't hesitate. I will be totally all right with that. But we can see, trying to get it to, oh, there we go, as a percentage. There we go. So let's get this to the line. Let's see where let's see where XRP stands, right? Since October 21st of 2019, since fall of 2019, comparing XRP to Ethereum, Tron, IOTA, and Litecoin, XRP has done the worst. It's lost 32%, almost 33%, whereas Ethereum, since October 21st, has gained 32%. So instead of putting your money in Ethereum, you put your money in Ripple, you lost 60%. Why would you want to put your money in XRP? That question, I have no idea. I understand they're creating partnerships, oh my god, that's great, but no one is actually injecting capital in XRP, it seems. And if there was money flowing into XRP, we would know about it. It would be relatively strong. But the fact that no money is going to XRP, it is relatively, by far, the weakest cryptocurrency that is mainstream out of the entire list. Why would you want to put your money in XRP? It just doesn't make sense. That's my view of it. Hopefully that didn't trigger anyone, because I know some people really, really love XRP, way too much. And hey, it's great to understand a project. It's great to know a coin. But there's a difference between a story or a narrative and price action or technicals, right? And we see this not just in altcoins and in cryptocurrencies, but we also see it within the current economics and the financial markets, where the economy, at a certain point, we were contracting with GDP, we were getting below 40s, we were getting into 30s, purchasing managers, PMI numbers, right? So we were seeing a huge contraction in economic activity. Yet, the S&P, the NASDAQ, things that people speculate on are still doing good. So that's a huge discrepancy, and that's a story or a narrative that economy's falling, it's really bad, it's going to get worse. And the actual technical reality is it's not doing bad. There are buyers, right? And that's obviously due to large majority of the Fed just being able to print money in unlimited quantities and give it to institutions or just buy assets themselves. So they are trying to not have a recession by just have a forever expanding credit and bull market, which obviously is impossible for eternity. So it'll end really badly, but it's not going to be on their watch, so they think they're doing a good job, which is absolute shit. But yeah, I really, really, really despise central bankers because they do nothing but they're kind of like a lot of people think humans are cancers of the world, but a lot of humans actually do a lot of good. I'd say central bankers are probably one of the worst in terms of wrecking the world. If there was no central bankers in the world, it'd probably be a better place. So enough with the random ranting. That's basically the end of my video. Hopefully you enjoyed it. If you do have any questions, you could drop them in the comments section below. I will keep the recording on for a little bit, but I will close the YouTube recording from here. So thank you very much for watching. I really appreciate it, everyone. Until next time, have a good one. If you thought this was informational, educational, entertaining, informative, it would be great if you would subscribe to our channel. It does help us out a lot. And if you think there was something that we could have done better, or if there's some sort of constructive criticism that you would like to add on, we do take that to heart, and we're very open to suggestions. And, we don't have a very big ego. Trading definitely kicks that shit out of you instantly. So, yeah, if you think that this was great, that was good to hear. And until next time, have a good one, everyone. Bye-bye. Alright, so that's the end of that. Don't really see anything else on the YouTube, so I'm going to close it off here. Thanks for watching, everyone. Until next time, have a good one.